Welcome to the Davis County video on how to complete your new business personal property filing statement. Line 1 represents the total value of assets previously reported. Since you are a new business, you do not have a value in this line. Please enter 0 on line 1. Line 2 is your monthly supply amount. This is the annual amount of supplies divided by 12. Things that are included would be things such as paper, toner, office supplies like pens, pencils, paper clips, staples, and anything that is used to run the business. Things that are not included would be things like, for example, if you are a hairstylist, the hair product that you use, or shampoo and conditioner. Those things are consumed in providing the service to your client and are not included. If you use fuel or oil to maintain equipment, you will also need to include that in your supply amount. There's more detailed information on what constitutes a supply included with the instructions that are part of your packet. For this example, we used $120 per month. For line 3, you will add the total of lines 1 and 2 together. For this example, lines 1 and 2 equal 120. Line 4 is the total amount of all of the assets that you list on your Schedule B. We'll now go through how to complete Schedule B. On this Schedule B, the first line has been completed as an example of how to use the form. Please take the time to list all of your assets. You can list them individually, or if you have multiple things of the same item, you may list them as it has been stated on this form. For right now, we won't deal with the property class, but you do need to list the year that you acquired the items and what you paid for the item when you acquired it. We'll go through each item one by one, and we will help you determine the percent good rate and the taxable value. Please remember that the acquisition cost includes sales tax and any shipping or installation charges which may have been part of that cost. Also, remember that anything that you use in the business must be reported, even if you own it personally, like a cell phone or a laptop computer. The first item we had in our example were 2 desks. Desks fall under furniture and fixtures, which is class 5, and those were acquired in 2016. So using the percent good chart, if you take class 5 and find where it meets the year 2016, that will give you the percent good that they are for this filing period. In this example, the item is 89% good, or 0.89. Coming back to our Schedule B, we will list under percent good 0.89. If you multiply 300 by 0.89, it gives you $267. This is the taxable value of the 2 desks for this filing period. The next item in our example is a desk chair. This is also in class 5 and was acquired in 2016, so the percent good rate is also 0.89. The next item in our example is a desk chair. It's also in class 5, but it was acquired in 2010. We're going back now to the percent good chart. Class 5 and year 2010, where those meet, is 0.32%, or 32% good. We'll move that number over to our Schedule B. The next item on our example is a laptop computer. It was acquired in 2015, and it is in property class 12. As you can see from our percent good chart, computers are in class 12, and if we match that up with where the year 2015 intersects, it shows us that that computer is now 0.46, or 46% good. We've moved the 0.46 over to our Schedule B. The last item on our listing is a copier scanner printer. It's also in class 12, but was acquired in year 2014. So we will go to the percent good chart to determine the percent good. The point where Class 12 and the year 2014 intersect is 0.21 or 21% good. We'll move that number over to our Schedule B. We're now going to multiply the acquisition cost of each item by the percent good to get the taxable value. As you can see from this example, the taxable value of each item has been calculated. In the next slide, you will notice we've moved the values down. This is just for demonstration purposes so that you can see where to put your total. So here is a listing of all of the items with their taxable value. The total of these items is then listed on line 9 of the Schedule B. This is highlighted in red. In this example, we've added the taxable value of all of the items listed. It is $824. The $824 is then moved to the front page of the filing statement on line 4. Line 5 is the total of lines 3 and 4 together. In this example, we will add $120 to $824 for a total of $944. In this example, the $944 is below the $10,300 exemption level. If your total on line 5 is $10,300 or less, you qualify to take the exemption from tax. In order to do this, you must file by May 15th, and you must have listed all of the assets that are being used in your business. If you are signing for the exemption, please do not send money. Even though in this example, the taxable value is below the exempt amount, we're going to show you how to calculate the tax in case the total taxable value for your account is greater than $10,300. In this example, we're going to assume that your business is in Tax District 23. The form that you received from the Davis County Assessor's Office will have the tax district pre-printed as well as the mill levy rate that pertains to your tax. If you have moved since the printing of your filing statement, please contact our office so that we can correct your address and give you the correct tax district and mill levy rate. Using the example of $944 as the taxable value, we're going to go ahead and show you how to calculate the tax. In this example, the mill levy rate is 0.013124. Taking the taxable value of $944 times the mill levy rate of 0.013124 will equal the tax due, which is $12.39. Regardless of whether you qualify to claim the exemption from tax or not, all filers must complete the box that is below line 7. Please fill out all of the pertinent information. Remember, we also need your signature, the date, and a current phone number where we can reach you. Once again, if your line 5 value is at or below $10,300, you qualify to take the exemption from tax. An exemption from tax means you're not required to pay the tax. If you're signing for the exemption, please do not send money. Hopefully this video has been helpful and has answered your questions. If you still need assistance, please feel free to contact our office at 801-451-3249. Thank you.